to the release of 2025 quarter 2 GDP estimates. Since we're going to do it by virtual means, please can we observe these guiding rules that we all put our mics on mute, and after the release and they'll get to questions and answers time, we can unmute to ask whatever questions we want to pose. This is to avoid any disruption as the presentation goes on. So I thank you for your cooperation, and we want to quickly move in to do the presentation. And to do that, our government statistician, Dr. Alassane Idrisu. Doc, you are welcome, and the floor is yours.
Thank you very much, Francis. Good morning, and thank you for joining us in today's release. Today, we are releasing Ghana's provisional GDP results for the second quarter of 2022, covering April to June. The big questions we'll tackle today include what's driving our economy right now? Are things getting better, holding steady, or slipping? And also, what does that mean for households, businesses, and government? We will start by quickly grounding ourselves in what GDP really means and also how it is measured. We would also walk you through the key highlights and forces behind the numbers that we'll be releasing today. And finally, we'll close with what these results mean for everyday decision making, from the kitchen table to the boardroom to government policy. Now, let's start with the basic facts and also some quick definitions. Nominal gross domestic product measures the total value of the final goods and services produced in Ghana over a period of time, and it is measured using current market prices. So usually the nominal GDP we talk about every day does not adjust for price changes. But when we adjust the GDP for price changes, then we are talking about real GDP. So what the real GDP does is that it looks at the economy's output in constant prices rather than in current prices. Now, one of the indicators that we hear very often is the growth rate. Usually when we talk about growth rates, we are talking about the real GDP growth rate. So in other words, the rate at which the real GDP is growing. And this tells us how much the economy is growing or expanding. And usually when the figure is positive, it means that the economy is growing or it is expanding. And when we calculate the real GDP growth and it is negative, it means that the economy is shrinking or it is contracting. So one may ask, this GDP statistics that we usually release, what's the relevance of it? They are very relevant to key stakeholders, including government, businesses, households, the international community, as they guide government policy and budget and also shape economic strategy across sectors. They also signal business opportunities and risks, and then they influence household confidence and living standards, as well as attract FDI. So it's a very important indicator in spite of its drawbacks. In Ghana, we use two main approaches to measure the GDP, though there are three approaches to measuring GDP. The three approaches are production, expenditure, and income approaches. But our emphasis on Ghana in terms of our releases is usually on the production approach and the expenditure approach. We are currently in the process of rebasing the GDP, and when we complete the exercise, it will put us in a position to be able to report the third source, which is the income approach. Now, when we estimate the GDP, we do it in stages. So usually our first release will be a provisional release, which is based on data as at the time that we are doing the release. Then subsequently, we get updated data and then we revise the numbers. So for which case we say the numbers are revised. And then when we get the final data, which is usually reflected in final accounts that have been published, then we say the GDP estimates are final. And also in putting out the GDP data, we are mindful of computational variations and adjustments. For example, we are able to make a distinction between overall GDP, which involves everything that we produce in the country, and also non-oil GDP, where we exclude the effect of oil and gas from the GDP. And this is just to track what is happening in the non-oil economy. We are also able to make a distinction between GDP at basic prices and GDP at purchasers value. Usually when we say GDP at basic prices, we mean GDP, nominal GDP, that does not reflect the impact of taxes and subsidies. And then when we say GDP at purchasers value, we are talking about GDP that reflects the impact of indirect taxes and then subsidies. As I mentioned earlier, we're also able to make a distinction between nominal GDP and real GDP. So the nominal GDP, another name we usually refer to it is GDP at current prices. And then the real GDP, we sometimes refer to it as GDP at constant prices. Now, again, we are also able to tell you GDP measured on year-on-year basis, and then GDP measured on quarter-on-quarter basis. So when we say we are giving you statistics on GDP on year-on-year basis, we are talking about GDP measured in comparison to same period last year. And then quarter-on-quarter, we are talking about GDP for a particular quarter relative to the previous quarter. So that's the quarter-on-quarter GDP. But usually, because the quarter-on-quarter GDP would usually, if you do a plain vanilla, it will usually involve seasonality. What we do is that we deseasonalize it. And so we say we adjust it seasonally so that we're able to compare it without seasonal effects. So we're able to provide that data as well. Now, we had some new data, and so we've done some revisions to our data. So the figures we'll be releasing today, you would realize that the GDP estimates for 2013 quarter 1 to 2022 quarter 4 have all been finalized. So in other words, we finalize them based on final accounts and the most updated data we can have. And then the estimates for 2023 quarter 1 to 2025 quarter 1 are revised. They are revised because we have new the information and we've reflected the impact of this information in the estimates of the GDP for the period that I've just mentioned. Today's GDP that we'll be releasing, which is quarter 2 2025 GDP estimates, they are provisional because they are the first set of data we have received that we've used to update the GDP. So they are provisional. Later, when we get more updated data, they will become revised and then they finally will become final figures. I must also include that we usually get our GDP data from administrative sources from a number of institutions in the country. Now let's jump straight into the highlights. So for quarter 2 of 2025, the nominal GDP for the period was 321 billion Ghana cedis, up from 258.9 billion Ghana cedis recorded in the same period in 2024. If you strip away oil and gas, the nominal GDP was 313.3 billion, up from 244.7 billion a year ago. Now, the real GDP, as I defined earlier, which basically adjusts for price changes for 2025 quarter 2, was 47.4 billion. And this is up from the 44.6 billion recorded in 2024 quarter 2. Now, if you look at the growth or the change in the real GDP between quarter 2 2025 and quarter 2 2024, it represents a real growth rate of 6.3%, up from 5.7% in the same period in 2024. So this means that the real GDP growth for quarter 2 2025 was 6.3%. If you strip away the impact of oil, we are looking at non-oil real GDP of 45.7 billion, up from 42.4 billion recorded in 2024 quarter 2. Now, the non-oil real GDP growth rate was therefore 7.8% for 2025, quarter two, compared to 5.7% recorded for 2024, quarter two. Now, the data would show that the deflator has moderated. And if you look at the deflator for the second quarter of 2025, it is 18.1% compared to 26.8% recorded a year ago. Now, let's look at the highlights basically from the various sectors of the economy. Now, let's look at what we are seeing in the various sectors. We see that the nominal GDP of 321.0 billion for 2025 is composed of nominal GDP of 74.1 billion from agriculture, 99.1 billion from industry, and then services 125.2 billion. Net indirect taxes bringing in 22.6 billion. So all of these make up the 321 billion Ghana cedis GDP, nominal GDP recorded in the second quarter of 2025. In real terms, as I mentioned, I talked about 47.4 billion Ghana cedis. This 47.4 billion Ghana cedis real GDP, 9.6 billion Ghana cedis came from agriculture, 15.8 billion came from industry, and services had 19.9 billion Ghana cedis, with net indirect taxes bringing in 2.1 billion Ghana cedis. Now, looking at the sectors, we see that the services sector, in fact, the services sector grew at 9.9%, up from 2% in quarter two of 2024, contributing to growth. In fact, it contributed the most to growth. If you check the contribution, you would realize that the services sector contributed 4 percentage points to the 6.3% growth we recorded in the second quarter of 2024. Again, the services sector remained the largest sector of the economy, and it made up 42% of the whole economy. Now, secondly, if you look at the services sector and you look at the contribution of the 4 percentage points I talked about, if you work it out in terms of percentage, the services sector alone contributed 64% to the overall growth of 6.3%. So this means that services really performed very well in quarter two of 2024. Agriculture sector grew by 5.2%, up from 3.5% in the same period last year, and contributed about 17% to the overall GDP growth of 6.3%. The data shows that industry slowed to 2.3%, down from 12.2% last year. Its contribution to overall GDP was 12.7%, far lower than the contribution of 70% recorded in the second quarter of 2024. Net indirect taxes contributed 5.7% to overall growth of 6.3% for the second quarter of 2020. Now, let's look at some more color in terms of the sectoral performance of GDP. Now, you will see in this graph that except for industry, where the quarter two GDP growth rate was lower than quarter two GDP growth rate for the previous year, which is 2024, all the sectors experienced higher growth rates. Whether you are talking about overall GDP, you're talking about non-oil GDP, you're talking about agriculture, you're talking about services, we saw significant increases compared to last year. as I mentioned earlier. Now, the shares. I just mentioned that services sector continue to take the largest share of the economy, 42%. But this is followed by industry sector, which is 33% in terms of composition, and then also agri sector, which is 25%. And all of these are worked out of the GDP are basic services. Now, sometimes we want to also check whether the growth performance we are seeing in a quarter is compared to the last 10 years is something that is appreciable. And so we have a graph that is comparing 2025 quarter two growth rate with average growth rate over a 10-year period. Again, the same trend emerges. So apart from industry, that grew at 2.3% in quarter two, which compares to an average over the last 10 years of 6.4%, meaning that its growth rate is lower compared to the last 10 years growth rate. All the other sectors had much higher growth rates. What does this mean? It means that if you took agriculture, for example, the 5.2% growth rate recorded in quarter two of 2025 is higher than the average for the last 10 years, which is 4.7%. If you took services, the 9.9% growth recorded for quarter two of 2025 is higher than the 6.6% recorded for the past 10 years. And again, if you took overall GDP, the 6.3% that we recorded in quarter two of this year is higher than the 5.8 recorded for the past 10 years. Non-oil, same story. We recorded 7.8% growth, and that's higher than the 5.5% growth recorded in the past 10 years. Now, we would also like to look at the quarter two growth rates and compare it to the previous quarter. Now, if you do the comparison, you would see that the quarter two growth rate of 1.4% is actually lower than the quarter one growth rate of 1.6%. And this is growth rate that we have taken away the effect of seasons. We've seasonally adjusted those growth rates. And these are the quarter on quarter. So in other words, between quarter two of 2025 and quarter one of 2025, the growth was 1.4%. And then between quarter one of 2025 and quarter four of 2024, the growth was 1.6%. And this is if you take away the impact of seasons. So we are talking about 1.4% for quarter two of 2025. But what is striking here is that even though the quarter two growth rate of 1.4% is lower than the quarter one growth of 1.6%, the quarter two quarter-on-quarter growth is actually the highest since 2019. And that's the red bars. If you extend the graph to 2019, you will see that the 1.4 is actually the highest. Now, let's now delve into the various subsectors and try and understand what is happening in each of the subsectors. Now, let's look at the agriculture subsector. If you look at the agri subsector, I had mentioned earlier that the nominal GDP for agri was 74.1 billion Ghana cedis. And here, crops alone generated 67.5 billion, with the rest distributed among livestock, forestry, and fishing. So you can see that crops is basically the largest component of agriculture. Now, in real terms, the 9.6 billion Ghana cedis that agriculture generated for the economy, we had 7.4 billion of it coming from crops, and then followed by 1.2 billion livestock, and fishing 0.5 billion, with forestry bringing in 0.4 billion Ghana cedis. Now, the growth of 5.6% contributed 83% to the agricultural sector growth of 5.2%. So the crops basically has the highest component of agricultural sector output. At the same time, we are seeing crops grow very high at 5.6%. And the point that we are making is that this 5.6% growth recorded by crops actually generated the highest contribution to the growth of both the agricultural sector and then in the agric, the highest contribution to overall growth. The livestock subsector recorded the highest growth of 5.9% within the agriculture sector and contributed 15% to agriculture sector growth. Now, seasonally adjusted, the livestock subsector expanded by 1.2% between Q1 2025 and Q2 of 2025. The fishing subsector recorded the least growth of 0.9%, contributing 0.9% to agricultural growth. And if you seasonally adjust the fishing subsector, the sector expanded by 0.2% in the second quarter of 2024. Now, let's look at some trends with regards to the agriculture subsector activities. Now, if you look at the trend, you will see that the growth of 5.9% in the livestock sector in 2025 Q2 is actually higher than 2024 Q2 growth by 1.2 percentage points. And then let's look at fishing as well. With regards to fishing, we see that after a very significant recovery in Q1, which registered a growth of 16.4%, we saw that the fishing subsector still grew. In other words, there was an expansion, but it was way lower than the previous quarter. So the fishing subsector actually expanded by 0.9% in Q2 of 2025. Now let's look at cocoa. So we are seeing similar trend with regards to cocoa as well. Cocoa activities within the crop subsector also actually slowed. In Q1, we saw a growth rate of 3.4%, and this slowed to 1.2% at the end of Q2. And this is following the recovery after 4 quarters of contraction. Now let's look at industry. What is the story in the industry sector? In the industry sector, the electricity subsector recorded the largest growth. And this was at 6.7% and contributed 0.09 percentage points to the overall growth of 6.3% in the second quarter of 2025. If you seasonally adjust the growth for electricity subsector, we saw an expansion by 1.8% in the quarter from 0.7% in Q1. Mining and quarrying had the largest share of 58.3% within the industry sector. It, however, contracted by 1.8% in the first quarter and dragged the overall growth by 0.28 percentage points. So let me take the mining and quarrying. I was referring to the second quarter. If you look at the growth, you realize that the growth is 1.8% negative, and that's a contraction, meaning that the sector shrunk. And the key reason why we are seeing the sector actually contracting is because of a very huge contraction we saw in the oil and gas sector. by 22.5%. Now let's look at electricity. Again, this is just to look at some of the trends in the subsector or in the activity. Now, if you look at electricity, the growth of 6.7% in the electricity subsector is actually an improvement that we have seen over the 2.8% growth in 2025 quarter one, and the second highest after recovery from the 7.5% in the first quarter of 2024. Let's also look at the trends with regards to mining and quarrying. There's been some volatility in the mining and quarrying space. So we've seen that the performance of this sector actually after contracting improved to 2.7%, and then it contracted again. So there's, however, a reversal of the expansion, as I just mentioned, to a contraction of 1.8% in the second quarter of 2025. And this is mainly driven by the contraction within the oil and gas sector. Let's note that the mining and quarrying subsector comprised of mining as well as oil and gas and other activities as well. So this is the specifics about oil and gas. So we see that the oil and gas activities are seeing the fourth consecutive contraction since 2024 quarter three, reaching the lowest growth rate since 2020 quarter two. So the 22.5% contraction we've seen is quite significant. Now, gold. Again, after growing at 29.2% in the first quarter of 2025, the gold activity slowed down to a growth of 19.1% in the second quarter of 2025. This growth of 19.1% is a contribution of 1.3 percentage points to the overall growth of 6.3%. Now let's turn to the services sector. I had mentioned earlier that this is a sector that grew the most. Number one, I also mentioned that this is a sector that has the largest share of the economy. And then number three, I also mentioned that this is a sector that is contributing the most to the growth of 6.3% we've witnessed in quarter two of 2025. Now, the information and communication subsector of the services sector registered the largest growth of 21.3% within the sector, and it contributed 24.1% to the overall growth of 6.3% in the second quarter of 2025. So this means that the information and communication subsector really contributed a lot to the growth we are seeing. Now, when you seasonally adjust the information and communication subsector, we've seen an expansion of 4.8% in the second quarter from 3.1% in the first quarter of 2025. So it means that not only is the sector expanding year on year, even on quarter-on-quarter basis, we are seeing an expansion of the sector. The real estate subsector had the least growth of negative 1.8% within the services sector. So in other words, the real estate subsector actually contracted by 1.8% in the services subsector. Now let's look at some of the trends in the information and communication subsector. Consistently, we've seen that the information and communication subsector has reached double-digit growth since 2020 quarter four, highly driven by data usage. The growth of 21.3% we've seen in the second quarter of 2025 is actually the largest we've seen since 2023 quarter three. Let's also look at the trends for real estate. So we see that the real estate activities have consistently been declining since 2023 quarter one. The subsector contracted again by 1.8% in 2025 quarter two, following a contraction of 0.7% in quarter one of 2025. Now, let's try and see whether we can actually summarize what we have gone through or what we have talked about in terms of the performance of the economy in all the sectors. The top 5 expanding and contracting subsectors in quarter two of 2025 are as follows. For the top 5 expanding subsectors, we are looking at information and communication that expanded by 21.3%, education 16.6%, health and social work 14.6%, other personal services 11.3%, finance insurance 9.7%. There were 2 main subsectors that contracted, but in terms of economic activities, there were 3 activities that actually contracted. So the mining and quarrying, which actually includes oil and gas, contracted by 1.8%. And here, as I mentioned earlier, the oil and gas subsector contracted by 22.5% in the same period. We also saw the real estate subsector contracting by 1.8%. In conclusion, what we are saying is that Ghana's economy grew by 6.3% in quarter two of 2025, up from 5.7% in quarter two of 2024. This means that the economy produced more goods and services than the same time last year. And it's also a sign of growth and recovery. Again, agriculture is still growing after recovery in 2025 quarter one. And the agri sector grew by 5.2% in quarter two of 2025 compared to 3.5% in quarter two of 2024. That's the same period last year. Again, this is great news for farmers and food prices. Livestock grew the largest in agriculture, growing by 5.9% compared to 4.7% in quarter two of 2024. Industry's growth is, however, cooling. Industry grew by 2.3% in 2025 quarter two compared to 12.2% in 2024 quarter two. The oil and gas sector declined sharply by 22.5%, dragging the industrial sector growth down. But electricity was strong, growing at 6.7% from 6.9% in the previous year, same period last year, showing increased power production to support growth. The services sector remains the strongest part of the economy. Services constituted the biggest share of GDP at basic prices at 42% in the second quarter of 2025. The sector grew by 9.9% in the second quarter of 2025, up from 2% same period last year, with the ICT leading the way at 21.3% growth. Now, services including ICT, education, finance and insurance, and trade contributed more than half, more specifically 52.2% of the 2025 quarter two growth of 6.3%. Non-oil growth is also coming up strong. If we remove the impact of oil and gas, the rest of the economy grew by 7.8% in the second quarter of 2025 compared to 5.7% in the second quarter of 2024. This shows that Ghana's economy is becoming more balanced, relying less on oil. Again, we need to emphasize that the information and communication subsector, education, crops, manufacturing, finance and insurance, and construction were the main drivers of GDP growth in quarter two. And altogether, they contributed 77.6% of the 6.3% growth recorded in the second quarter of 2025. If we seasonally adjust our quarterly GDP estimates, we saw the provisional real GDP increased by 1.4% in Q2 of 2025 from 1.6% in Q1 of 2025. And this seasonally adjusted Q2 growth is the highest Q2 growth since Q2 of 2019. The five top expanding subsectors are information and communication, which grew by 21.3%, education, 16.6%, health and social work, 14.5%, other personal services, 9.7%, and finance and insurance, which grew by 9.7%. The three contracting activities, as I mentioned earlier, are oil and gas, which contracted by 22.5%, mining and quarrying, which contracted by 1.8%, and real estate, which also contracted by 1.8%. So what are the implications of all of these for households, businesses, and government? For household, we'd like to recommend that there's a need to build skills in fast-growing areas like ICT, education, and health to tap into the expanding job opportunities. Again, there's also the need to support local agriculture by buying more Ghana-made food products to strengthen the demand for farmers' output. For businesses, it will be good to invest in digital and service-oriented solutions to ride the wave of the growth we are seeing in ICT, finance, and education. Again, it will be good to diversify beyond oil-related industries and align production with rising household demand for food, health, and technology. For government, it will be important to prioritize infrastructure and energy investment to sustain the growth we are seeing across all sectors, especially in industry and services. It would also be good to strengthen data-driven monitoring to anticipate shocks in oil and gas while supporting the non-oil growth engines. Ladies and gentlemen, thank you. And this brings me to the end of the release for Q2 2025 GDP. For more information, kindly contact Mr. Francis Bright Mensah, who is the head of national accounts. You can also visit our website where you would find a bulletin, you find this presentation. You would also find infographics and other information about the release for Q2 2025. Thank you very much.
Thank you, Dr. Lassa, Government Statistician, for the presentation. And thank you, participants, for joining us virtually for this release. So the 2025 Q2 GDP release has been disseminated, and we stand by for any question. If you have any question, please raise your hand and or mute and ask your question, and the government statistician will provide answers to that.
Yes, Doc, I quickly want to ask, please, can we get the figures for the sectoral breakdown for first quarter? So agric sector, by how much it grew in the first quarter, year-on-year basis. The industry sector, how much it grew in the first quarter, year-on-year basis. And then the services sector, how much it grew year-on-year basis in the first quarter for comparison reasons. Thank you.
Okay, do we have any other question?
Yeah, Prof. Doc, thank you for the presentation.
Overall GDP, how much it grew?
Okay, my colleague wants us to know, like, first quarter overall GDP. You know, we said it was revised, but we haven't gotten that figure yet. So what the first quarter overall GDP is, so that we can compare it to what we have regarding quarter two, which is the 6.3. Given that the is a 5.3 had been revised. That is one. And we notice that over time, increasingly, non-oil GDP is doing better than oil GDP. And it ponders the mind of one to wonder whether the oil GDP, albeit it contributes to the economy, is not like a negative effect on the economy, because from the layman's point of view, it sounds as though the economy is freer to run devoid of oil, but oil almost like bucks it down. How come the contribution of oil rather results in hamstringing somewhat of the GDP? Thank you.
Thank you, Echo, for the question. Can we take the third one, then we allow the government statistician to respond so that we can bring proceeding to an end? Yes, I think you can go ahead and respond to these two questions.
Yeah, please, can you hear me?
Yes,
Yes,
we
sir.
can hear you now.
Okay, good. So, Echo, if I got your question, I think your first question is closely related to the first question that came, which is what are the quarter one GDP growth rates in terms of sectoral decomposition, and also what are the compared to the new one, right? And then also the second question is the contraction of the oil sector. Why is it the case, and how is it impacting? Why is it impacting on GDP growth the way it is? It is the way we are seeing it now. Did I get the questions right?
Yeah, you did.
Okay, excellent. So Francis, if you could show the slide, the first slide that we had, or what you can do is just to take, Francis, you can take them through the quarter one GDP numbers. If you go back, please show the slide where you have agri industry and service. Yeah. Okay. Also, okay, so this shows a quarter two and then quarter. So Francis will take you through the numbers. But let me take the second question. So Echo, as you know, oil and gas, or the oil sector, is a depletable, oil is a depletable resources. And usually, when you produce oil and gas after some time, they come to their peak, and then they begin to, to contract.
Yep.
So the trend we are seeing is not an unusual trend. Of course, it's very usual, unless you have more oil discoveries, that would enable you to add on to, the production, or if you want the value addition, you would see the trends that you are seeing. That's why it's always advisable to diversify your economy when you find a depletable natural resource, because once it's depletable, it means that after some time, you will not get the same volumes as you are getting. And so when you get the resources, there's a need for you to ensure that you are using the resources to diversify the economy. You move away from oil, and then you go into more sustaining activities and programs. So the trends we are seeing is not unusual at all. However, there are investments in the sector which suggest that there will be new exploration and new production, which will come on stream in the medium term. When we do have these come on board, we'll see improvement in the numbers. So that's what I would like to say with regards to the oil and gas impact. And to say that the most important lesson we are getting from there is that diversify the economy, ensure that you are not putting all your eggs in one basket, so that you avoid the Dutch, that's what we refer to as a Dutch disease. Then the returns from the oil can be used to engage in more sustaining sectors. And that's part of also the reason why when you get the oil resources, you don't spend all of it at a go. You put some into sovereign wealth funds. And in the case of Ghana, we've put some of the funds into civilization and also into heritage, so that at least part of the oil resources can be reserved for unborn generation. Thank you very much. So Francis, if you could take us through the various changes in terms of Q1 compared to the Q2 growth rate. Thank you.
Thank you. So, if you can see my screen, just as the government statistician indicated, we did a revision due to new data that we received from 2024 Q1 to 2025 Q1. So, if you look at column K, the previous publication 2024 Q1 was 4.9. It has been revised to 4.5 in this current publication. Q2 was 7.5, revised to 5.7. Q3 was 7.2, revised to 7.0. Q4 was 3.6, revised to 5.3. Q1 of 2025 was 5.3, and it has been revised upwards to 6.3. So the Q1 2025, because 2024 have been revised, it will definitely have effect on the 2025 figures. So these are the current figures that we have in terms of real GDP.
Mr. Francis, it's not so clear. So can we take it that the revised Q1 2025 GDP is 5.3%, which means unchanged?
Yes, it's changed now to 6.3.
6.3. Okay.
Yes.
Okay. And then agricultural
So
sector.
the sector, yeah, it was 2.9, now changed to 6.6. Industry was, sorry, it was 6.6. It's still 6.6. Industry was 3.4, now
4.1.
revised to 4.1.
Hopefully.
Services was 5.9 and now revised to 7.8.
Okay. Thank you very much.
So you're saying that for GDP growth, both the first and the second quarters now grew at the same figure of 6.3. That's what it means.
Yes, coincidentally, they both grew
Yeah,
at 6.3.
coincidentally. Yeah, I wanted to be sure.
Yes.
Okay.
But I think one is
Thank you.
bigger than the
Are you okay?
other. If you go to, you see that the Q1 was 6.33 and Q2 is 6.26. If you increase the number of decimal places. Thank you.
Yeah,
So as the government
I have a
statistician.
follow-up.
Okay, okay.
Yeah, so Doc, thank you again for the presentation and the answers. In your recommendation, I was following a lot of figures, so I might have missed it. So if you hadn't said it, pardon me, I may have to repeat it. But given the way oil is a deflator, as you call it, I thought your recommendation should have been something like, in the spirit of the energy transition and that everybody's running away from fossil fuel and transitioning to, sustainable modes of powering our machines and EVs and what have you. Maybe the recommendation could have been government could maybe vary the fiscal regime for the oil and gas so that we do not have stranded assets and that we can have quick and proper investments in the soonest possible time in our race against time to tap into those resources before we leave them stranded. What are your thoughts on that? That is if you didn't capture that recommendation, and if you did, fine. If you didn't, why, and is that feasible moving forward? Thank you.
Okay. Eko, thank you, Moses. Thank you so much for your question. So basically, I mean, oil and gas, like I said, is depletable resources. And also, you're right. We are in a transition period where we are moving towards more green, let me say green fuel or green energy green energy rather than these fossil fuels. So you're spot on that. But once again, you need to know that this is a decision that must be taken by a country. Oil is a strategic resource. We know that it's a depletable resource, yes, but it's also a strategic resource. And a lot of factors must be taken into consideration to make a determination as to whether you should pump all the oil out now or you should do it in a certain staggered manner or whatever. So I think it's a bit difficult to just say that do that now because of the transition period. I think it's a strategic decision that has to be taken, bringing into the equation a lot more factors than meet the eye. But in principle, I think you're right. The whole world is moving away from fossil fuel. We should ensure that we are moving with the times, we are embracing technology, and ensure that the oil that we have becomes an asset to us rather than a liability. And so the point I'm making is that a lot more considerations must be, taken into consideration. A lot more factors must be taken into consideration in taking such a decision. Thank you.
Thank you, Dr. Lassan. Thank you, ladies and gentlemen, for joining us. We've put a folder that contains other details in the chat area so you can have access to it. Also, when you visit our website, you see the newsletter, you see the bulletin that gives you the series from 2006 quarter one to now. You also see the revised annual GDP publication on our website. So next month, first Wednesday next month, we'll invite you again to the release of the CPI for September. The Ghana Statistical Service is also likely to come out with a new product and will let you be in the know and invite you to the release. We thank you so much for your attendance and attention.
Thank you, Doc.
Bye.
And thank you, Mr. Mensah. Thank you all.
Yes, thank you so much. All right.
All right.
Bye.
All the best.